Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Phil, it's been another short week for us and everyone, a busy week, and we're in June.
I know, coming to the end. I know, that's pretty worrying, isn't it? Half-year point of the year. And I'm sure we'll start to see some interesting stories come out as the OEMs and retailers in the sector start to think about where they are at this half-year point and what to expect for the remainder of the year. But we will get onto some of that, probably some of the stories today.
Yeah, definitely. And it's been a busy old week for us on the podcast because we interviewed Chris Plumb from Cap HPI earlier in the week. He was talking about how May's trade values performed. And it was a great interview, actually. It's the first time that we've had Chris on the podcast. And it's very revealing about May's trends. But of course, Chris's main area of interest is used EVs as the sort of valuations editor there at Cap HPI. So we'll have an extract from that interview on today's show, and that will focus on used EV trends.
Yeah, and I would highly recommend listening to the full interview there with Chris. As Curtis alluded to, that he's 90% of his time is at the minute on EV. He's well versed in that EV space and what's happening around the valuations of battery electric vehicles at the minute. So do listen to that full interview because we are only going to share you a brief snippet from that interview this week.
And also this week we caught up with Virtue Motors boss Robert Forrester for quite a wide-ranging interview, wasn't it, Phil?
Yes, yeah. I mean, if anybody's seen Robert over the last sort of fortnight, that since they produced their full year financials, he has been out and about talking about their financial performance, but obviously then alluding into some of his observations, concerns, etc. around the market. So the interview that we've got coming up is really in depth, very wide ranging. We do talk about the financials, but we also do delve into some of his views on the new and used car market trends, the ZEV mandate with a little bit of politics that crept in.
He was particularly candid and forthcoming on the ZEV mandates, wasn't he?
Yes, yeah, and you're always going to be wary to introduce politics into the conversation with Robert, but I don't think you can talk about the ZEV mandate without the political side of things. And he does talk a little bit about his view on some of the new entrants entering the sector as well. So do stay tuned for that next week. You will love it. It's a fascinating interview there with Robert Forrester.
Yeah, so that'll be on your podcast feeds next week.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from AM, Car Dealer, Motor Finance and the Mail Online, starting with OEM tactical registrations could hit long-term used values. Cox Automotive highlights importance of car dealers despite seismic industry changes. Dealers reveal what buyers look for when purchasing a new vehicle. We reveal just how many EV models are now on sale in the UK. And we'll close this week by looking at how falling EV values have hit a big European dealer group. But before we look at those headlines, here's an extract from that interview that we did earlier in the week with Cap HPI's Chris Plumb.
Yeah, well, there's lots of nuance within the fuel sectors, and it is a really interesting area to track in the market. So we've continued to see really strong demand for petrol vehicles, as again at 3 years 60, they decreased on average by just 0.4%, so a lot stronger, and that was equivalent of £135. while diesel, plug-in hybrid and pure hybrid vehicles experienced some larger decreases, anywhere between -1 and -1.1%. So we're talking sort of circa £200 across those fuel types. But it is battery electric vehicles that everyone seems to want to talk about, and their continued, I guess, that continued downward pressure that we see. So we are reporting on a movement for a decrease for BEVs this month of -3.6%, which is equivalent to about £785. I guess if you were trying to be positive, you say it's slightly better than last month, which saw a decrease of -3.7. But they've performed very similar to last month. And can you believe it or not, we're now reporting on our 21st consecutive month of EV declines. Over that period of time, the cumulative decrease in EVs, again at 3 years 60, is circa 57%. And just put that into context, that is petrol vehicles over that period of time also came down just by 12%. So considerably big adjustments in the market. It's some of those numbers are quite eye-watering.
I mean, keeping on the positivity side, I mean, there are some significant declines, aren't there, by model type? I think you mentioned some of them in the editorial, but there is some price stability there, isn't there, for some models? So it's there is some particular EVs that are really driving that market down.
Yeah, I think so, and not sort of pick out any EVs that have or single out some EVs. I'll give you examples of ones that have moved. But again, of all the EVs that we value at 3 years 60, 89% saw values decrease, 10% saw values stay level, and just 1% saw values increase. When we look at some of those noticeable movers, you've still got models like the Audi e-tron Sportback have come down 5.9% or £700. The Nissan Leaf, 6.8% or £600. The Tesla Model 3, 4%, £800, and the ID3, 6.2% or £785. There are some models that say that had stayed level, so things like the Cooper Born, the Lexus UX, and the Seat Me saw no change in value. While the one vehicle to see values increase was the Mini Cooper, which seems to be in good.
I was going to ask who was that 1%. Yeah.
It seems to maybe have hit a price point, but there are big drops, to your point, Phil. But from a used consumer's point of view, these cars do look extremely good value for money now. And in a lot of cases, when you do the comparison between ICE to EV, the EV 9 times out of 10 seems to be cheaper now. So it does give an opportunity as well. Even though prices have come down, it does open the market up, especially when that true used 3-year-old product.
Yeah, I think, like you say, I think there has been a realignment, and there's significant realignment. We're still feeling a bit of the pain, and I think to your point, there is still volatility, and some of that is driven by new models, life cycles, etc. in the marketplace. But there is some good propositions there as a used vehicle for the right person that can, take advantage of that EV.
Yeah, I totally agree. It's well, I'm an EV convert myself, so I'll speak positively about them to anyone who wants to listen, really. But I think there are some opportunities out there in terms of if you're looking to stock, maybe you haven't looked to stock an EV for some time because of some of the big drops. You can now buy at today's trade, put the vehicle on at a sensible margin, and I think we'll touch on the days to sell in a bit, but we're seeing that the vehicle's priced right and it's at the right type of price point that they do sell really well.
Fascinating, really, isn't it? And we'll return to this theme over the course of the pod, those falling EV values. But interesting reference there to that price parity, because that's something that we've talked about. I think only last week on the podcast.
It is, yeah, and I mean, 57% drop in 21 months against a 12% drop for petrol vehicles kind of says where some of that has come from. But, as you say there, Curtis, within the interview as well, he does talk about those sweet spots, doesn't he?
That was particularly interesting because he in the editorial this month, in the CAP HPI editorial, they actually talk about this sweet spot for EVs, which is sub £18,000.
Yeah, so I think, again, without stealing all of the interview there with Chris, do head over to your podcast feed from earlier on this week and have a listen to the full interview and obviously check out the full editorial from CAP HPI, which gives a little bit more detail into what has been happening. And, Chris does share his views of what he expects to happen for the sort of months ahead as well. So very well worth a listen there and a little bit of your time to tune into that. But back to the headlines, and we're heading over to AM Online for the first headline. And this is OEM tactical registrations could hit long-term used values. And this is a report from Indicator. So they're saying that car manufacturers impacted the used car market in April, with sales of sub 12-month-old vehicles rising by 39.1% year on year. And this is according to their latest Market Watch report. So, yeah, pre-reg tactical registrations is well and truly back, Curtis.
It is. It's like the good old days, isn't it? And the piece goes on to say that this surge indicates that car supply is nearing those pre-COVID levels, but the report goes on to say, but it does raise concerns about potential long-term damage to used car values if the trend persists. And within the piece, it says currently many of these nearly new used cars, and specifically electric vehicles, are being registered but not being wholesaled, as dealers are hesitant to increase their inventory of used EVs. So that really does tie in with what Chris was saying about those used EV values coming down and that level of confidence possibly rising a bit more than where it was amongst dealers in terms of actually committing and buying and stocking EVs.
Yeah, they do cite that hesitant to increase their inventory of used vehicles, used EVs particularly, and saying that the used EV could or should flood the market and depress their values even as they're maybe potentially stabilised. But it's interesting because they do have obviously sight of what's happening in Europe, and they do point out that the UK's market day supply of used EVs is the lowest in Europe at 57 days compared to petrol at 40 days, diesel at 44, and hybrids at 45 days. So really showing that pressure on EVs.
Yeah, and it's a theme we will return to over the course of this show. But moving on to the next story, which comes from Car Dealer, and the headline there is Cox Automotive highlights importance of car dealers despite seismic industry changes. So this is from the latest Cox Automotive Insight Quarterly, which I know you've put together there, Phil, and it's very much looking at some of the changes to the automotive industry as seen by retailers. And this is based on some of the research you've incorporated from ICDP and a friend of the podcast, Steve Young.
Yeah, exactly. I mean, this is the contribution from Steve at ICDP, and as you say, a regular contributor to the podcast. And it's really looking at that role of the dealer and where they sit within the sector as it starts to shift, and that retailers do remain as important as ever. I mean, without getting too much into that discussion around the kazoo, which he does refer to in the piece there, but he does say that the simplistic approach adopted with expensive external expert advice from some OEMs, brands and disruptors like kazoo towards retail has ignored the critical support provided by dealers to keep the wheels turning. So really highlighting there in the report of how important the role is of the dealers. But essentially, the dealers have to change and evolve and adapt to what the OEMs and the new market landscape looks like.
Yeah, because there's an interesting comment here from Steve. He says that some manufacturers have mistakenly thought that the customer journey and all buyer needs can be managed by a few rigidly defined processes. But as you and I know, Phil, the customer journey, there isn't a single customer journey. Customers come from it from different angles. We've got omni-channel. They may dip into the physical world. They may dip into the digital world. And at some stage, those worlds come together. And he goes on to say, in reality, there are probably more types of customer journey out there than we could ever imagine. I think he's hit the nail on the head there.
Definitely has. He definitely has. So I say just that's been covered in Car Dealer there. So do check out the full report from Steve Young on that
one. You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are on your podcast feed.
So next headline is from Motor Finance, and it is dealers reveal what buyers look for when purchasing a new vehicle. So this is based on research by Close Brothers Motor Finance, and it's research of dealers. It's the views of dealers. So this latest forecourt foresight research reveals that over 3/4 of dealers see price as the key consideration for their customers. Probably no great surprise there, but customers are focused on price, and this is what dealers are seeing. So the research, which asked dealers what their customers look for when buying a vehicle, found that in addition to the question of finance, almost 6 in 10 dealers say the mileage on the clock is a key consideration, while less than half say the manufacturer and model of the vehicle is most important. So probably a bit of a wake-up call there for OEMs.
Yeah, and I think they do talk a little bit around obviously the topic of today's show, which is battery electric vehicles, saying that around the impact that government incentives and schemes are having on the behaviours of motorists. That almost a third, 30% of dealers say their customers take compliance with schemes such as ULEZ into consideration when making a vehicle purchase. A similar number of dealers, 29%, say the biggest consideration for their customers is the vehicle's running costs, such as the servicing and the vehicle and road tax, but potentially saying that reflecting in the low interest among UK drivers for making transition away from internal combustion engines and towards EVs and alternative fuels is just 1 in 10 say fuel type is important, whilst the same number say that efficiency, i.e. miles per gallon, is key. So making some key points there as to consumer behaviours towards this cost of ownership and efficiency and running costs around combustion engines versus alternative fuel vehicles.
Yeah, and that really is quite low, isn't it? Just 1 in 10 dealers saying that customers looking at those fuel options and alternative fuels is a consideration, and that's a figure that obviously needs to be an awful lot higher to meet the various legislation in place, and indeed the increase in number of EVs, both new and used, coming to the UK, on sale in the UK at the moment.
Yeah, and it does, like you say, it reflects the current new vehicle performance, doesn't it? I suppose in a way as this adoption towards this battery electric vehicle growth and that where it started to slow down this year, that it does kind of reflect that it's not a high priority for the consumers at this point in time.
But meanwhile, the next story sheds light on just how many EV models there are in the UK. So this is from the Mail Online, and the full headline is, and it's slightly loaded, this one, but here goes. There are now over 100 different EV models on sale in Britain. The only problem is finding drivers who want to buy one. So I guess that ties in quite neatly with that last story, with the sort of 1 in 10 showing an interest. But this is this is a report from the Mail, and it's based on some stats that the SMMT put out during the week, and it's actually identified that there are 102 different electric car models on sale in the UK at the moment, and they've done a comparison, a sort of 10-year comparison, when back in 2014, I think there were only 14 different EVs on sale. So it just shows how that momentum has picked up, certainly over the course of the last couple of years.
Yeah, and it's quite interesting because they put in there that the average range of EVs is 236 miles, which is 13 times the average daily mileage. And they're saying that with public demand down, government is refusing fresh purchase incentives, which I think we may have talked about previously. And I think if you listen to the next week's podcast with Robert, there's probably a reference to it in that as well. But I think, clearly the choice of vehicles is significantly increasing. The variety of different battery powered vehicles saying across the showrooms has grown by more than 500% in the last decade, with only 16 electric variants on sale in the UK back in 2014. So you're kind of showing this growth, and I think it'll be great to look at this report in another 12 months' time when these new entrants and Chinese operators have really come to the UK and started to land on the market, of what that number starts to look like then, Curtis.
Yeah, because that 102 won't stay static for long, will it? Because every week on the pod we talk about new entrants coming into the UK with pretty ambitious plans and launching new cars all the time. So new brands, new models. So yeah, that figure will accelerate upwards.
Yeah, and there's a couple of the references in there saying that the SMMT states that almost a third of models on the market in 2024 are electric, and they're obviously reciting that 102 different variants, but saying obviously that's from your super minis through to your SUVs, your sports models there. But clearly, looking at where the UK is shifting towards this battery electric vehicle market, but I think to our earlier stories there, we need a little bit more uptake from consumers for this one.
Yeah, definitely. And last story this week comes from Car Dealer, and it is the headline there is "Falling Used Electric Car Prices Sees Hedin Mobility Book Hefty Loss in Q1." Now, it's unusual, I guess, on the podcast for us to look at the performance of a European dealer group, but Hedin happens to be one of the largest European dealer groups, and of course it's very active in the UK, as it owns what was Mercedes-Benz Retail Group and the Stephen James Group. So what happens at Hedin is of great interest to the sort of wider UK dealer community. So within the report it says that Hedin finished the first 3 months of 2024 with a loss of £17 million on sales of 1.7 billion, which was actually up 32% on the same period last year. And the accounts for the first quarter also shows operational earnings fell from 28.3 million in Q1 last year to just £7 million in the same period this year, while operating profit plummeted from 43.7 million last year to just over £500,000 this year. So operating margin dropped from £2,444 to a flat figure in Q1.
Yeah, and there's a quote in the piece there from the CEO Anders Hedin, who described the first quarter of this year as challenging due to the widespread price cuts on new electric vehicles by car makers, falling demand across Europe due to the removal of subsidies, saying that the market has been characterised by caution during that first quarter, and that the considerable and relatively rapid increase in the interest rates has resulted in a decline in the order take over the past year, order intakes, we say, in the past year there. So clearly citing some of that financial pressures, in addition to the volatility, should we say, of that battery electric vehicle sector across the UK and Europe, as the OEMs do some price adjustments, and they're challenging in terms of that adoption in the new vehicle market.
Yeah, and despite the hit on earnings, Hedin remains positive for the immediate future of the service business in retail, but did say the company was reviewing the entire business to create a long-term, efficient and competitive structure. And the story also confirms what Car Dealer reported earlier in the month, that the firm would rebrand many of its dealerships in the UK as Hedin Automotive. So for the UK, that means the Stephen James Group will switch names.
Yeah, and it finishes on a nice little optimistic quotation there from Hedin, saying that expectations of decreased interest rates combined with their lower inflation forecasts, they are optimistic about the gradual improvement in economic activity and demand during the second half of the year. So obviously citing that the economy and consumer and business confidence will increase as we go through the year on the back of reducing inflation and potential drops in interest rate as a result of that inflation drop as we head through the year. So, not great news, but optimistic outlook for the Hedin Group there. So I think that's it for this week, Curtis. We've kept it fairly tight and short, conscious that you've still got the, if you haven't listened to it already, the interview there with Chris Plumb on his debut on the podcast from Cap HPI there, with a fascinating chat there, particularly around the month of May, but more importantly, EVs and the outlook for the next month. And you have a fascinating interview coming up next week, as we mentioned at the outset of the show, with our friend of the podcast and friend generally, Robert Forrester, who is open about his views of what's happening in the market and the position of Virtue Motor Group as well currently in the marketplace. So do stay tuned for that one.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week's special interview with Robert Forrester, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.